And welcome to the Capital Tech and Transitional Energy podcast. And we're back again after missing last week because we had our VSA Vision contest, didn't we, Phil?
We did. It was excellent.
Actually, people did seem to enjoy it. It went very well. It was punchy. We had interesting companies. We had a bit of protester, which was quite funny.
We did. Yes,
really,
indeed.
Quite what those ladies were doing protesting in our conference was bizarre, but they obviously didn't like Richard Tice for some reason. Each to their own, but they made slight fools of themselves, but there you go. But anyway, what was interesting was that I thought that the winners, basically, of the afternoon were the transitional energy companies we'd got presenting. And yet in the market at the moment, of course, it's the mining companies that are going bananas.
It is.
And everybody wants to talk about mining, but investors find it so difficult to get that exposure. But just going back to the conference, the third place company was Equipmake, always done well. Ian Foley presents always exceptionally well. And he was slightly jet lagged. I think he had literally just got back from India. As most people know, we're doing quite a lot of business with India at the moment, but I'll say no more. In second place, it was actually a private company out of Cornwall called Recycle It Global. Really, they came second, I think, because Paul Nichols, the CEO, presented just so well. He was very impressive.
Yep.
And in third, and very cleverly giving no presentation whatsoever, but just using the audience.
First.
Did I say third?
Yeah, he's first.
God. Sorry, in first place. My apologies. Was Aurrigo, our airside autonomy company. So well done to all those that took place, or participated, whatever word you want. And it was a good event. And then back to this week and what's going on. I mean, the world is still completely upside down. It's like a blooming washing machine at the moment. You never know quite what's going to happen. Whether we're on, I don't know, 1400 spin, 1200 spin. No, who knows what we're on. But of course, it is commodities that everybody's talking about. Everyone needs to talk about how NVIDIA had just gone through the 5 trillion mark. Now people are saying, the commodity sector, all the mining equities put on $1 trillion in market cap this week. And it is a little bit like that. Pretty extraordinary, but we're not here to talk about mining companies. We do that on our 5-minute morning miner. We're here to talk about tech and transitional energy. And actually, of course, last night, we had a whole load of them report. We had Tesla, Microsoft, Meta, which the market took pretty much in its stride, actually, I thought. I think the big thing, and again, we always link the two together, and people do sometimes question why we link the two together. But one of the things that was coming out of all those results was the amount of money they're going to spend on AI. And I have had a few people say, how on earth do you spend so much money on AI?
And how do you spend it? Yeah, how do you deploy it?
The answer is actually pretty simple. It's because AI basically is data centers, and data centers need a vast amount of power. And actually what they're spending a lot of this money on is the power part of it all. They're building their own nuclear reactors and things like that. Well, if they're building their own nuclear reactors, you can imagine the demand for uranium is going to go up, probably why uranium's just gone through $100. So, you can spend an awful lot of money on AI because you need that power. Now, the interesting as well, one of our companies, going back to our conference last week, was Star Energy. Nothing to do with tech and transition energy, or is it? Because, of course, what they've got is all the fracking rights up in the Gainesville Trough. And actually, if fracking was allowed, which it should be, it really is as safe as I don't know what, it would create an enormous amount of homegrown gas, which could power the data centers, which would allow the UK to become a real force in data centers. So it's not madness to say we should be fracking. It's actually in everybody's interest, bar perhaps a couple of ladies who want to protest because, I don't know, maybe they've got a purple daffodil or something they want to protect. I don't know. Anyway, don't get me going on something like that. So there's my little thoughts of the day. It doesn't feel, as I say, some of the tech bubble seems to have moved over to a mining bubble. Is it a bubble? That's a good question. But other than that, everything's sort of tickety-boo. We had rates in America kept on hold. There's talk that rates in Europe could come down. Who knows what will happen to rates in the UK? Nobody has a clue, not even the government. Or Andrew Bailey for that matter. Anyway, there we go. Phil, how are you? What are your thoughts?
Well, I'm very, very good. Obviously, looking through these US results, what's astonishing me about this is the capital expenditure. And I think Meta's now planning to spend $138 billion, which is £100 billion in capital expenditure. I mean, how do you deploy it? It's the pace of deployment. It's deploying all that capital. But of course, investors, there's some questions about the returns. But just getting straight into things. I mean, Tesla was very, very interesting because we've talked a lot in this podcast about what's happening in Europe, the European car market, the rise in China. China imports has been impacting Tesla sales, but they reported their fourth quarter results and also their full year. Automotive in the fourth quarter declined by 11% year on year, but energy storage was up by 25%. Clearly, a subject that we cover much. And annual results were showing that the profitability was down, but it seems to be the energy storage side that's really is growing now in Tesla. It is saying it's going to withdraw a couple of its vehicles, but a key, an eye-catching thing in their results statement again was capital expenditure. They're expecting capex of $20 billion, and they're going to be spending on fully autonomous vehicles, humanoid robots, and of course AI is where they are investing. So,
I mean, you looked at it, you almost thought they're giving up on cars. I mean, they're not giving up on cars, but Elon's certainly moved on a little bit, shall we say?
Yes, and of course we've got potentially later in the year we've got Starlink May IPO, rumored at $1.5 trillion as an IPO. So let's see. I mean, that's rumored for June. Microsoft also reported their revenues were up by 17% to $81 billion, but their capex was up by 66%. Their earnings were up by 23% to $31 billion. But let's get on to the capex. I mean, the quarter, their capital expenditure was $37.5 billion, up from $35 billion. What was quite interesting was their cloud results, and this is their Azure cloud offering. Revenues are up by 26%. But there were some concerns in the market about slowing momentum. But what was also very, very interesting is they disclosed for the first time that 45% of its $600 billion order book was OpenAI. That's where it's all coming from. And of course, there's been a lot of discussion in the market about how OpenAI is being financed by all of these big tech companies. Bloomberg today, in fact, have come out and they're saying, this is their quoted sources, what they quoted, information reported. People familiar with talks is what Bloomberg cite. Nvidia, Microsoft, and Amazon in discussions to invest another $60 billion in OpenAI.
It's mind-boggling, isn't it?
Yeah, it's the sheer scale of money that's involved in this, and the markets are looking very, very closely at the potential returns. I was going to also look at the share price performances. I mean, Meta's sort of flat over 12 months. Microsoft's up by about 9%. There's markets waiting to see really what the returns can be. Right, getting closer to home though, we've had a lot of trading updates.
We've had a lot of trading.
We've had a lot of trading.
Too many trading updates.
But a lot of them have been very good. Computacenter, who we covered a lot on this podcast. CCC is the ticker, £3.5 billion market cap. Shares are up by 45% this year. And this is Computacenter is all about providing IT services. So this is IT, advising IT infrastructure on software for corporations, also the hosting, cybersecurity, all those good things in IT. They've got 70 customers in 70 countries worldwide. Their trading update, they're saying that gross invoice income up by 32% during the period. Strong performance in North America in particular. UK, good performance, despite lots of question marks around the economy. Customers still very much spending on IT. And Germany, they had a good second half. It's expecting pre-tax profits of £270 million, comfortably ahead of market expectations, which is what we look for. Also got net funds of £600 million. So a really good position there. That's Computacenter. Sage.
Mm-hmm.
Yeah, the accountancy firm. I'm sure lots of folks listening to this and in business will be using Sage's software. The ticker is SGE. The market cap is £9 billion. Shares are down by 27% this year over the last 12 months.
That's not good, is it?
No. And why might that?
Tell us why.
Why is that? Concerns over AI disruption to accountancy software. So, nonetheless, they've reported a trading update. Revenue in the first quarter to December end. Revenue's up by 10% to £674 million. And this is all organic growth. Their cloud revenues are up by 15% to £574 million out of that 674. So a great majority now Sage moving from a licensing software model to clearly a cloud services base. Strong revenue growth in North America, also UK and Ireland, across the regions. So Sage's revenue, despite the concerns so far, continuing. I don't know enough about the AI and potential AI.
I'm actually quite confused, but I've never really thought about it. But would AI really replace your need for accountancy systems?
Yeah. I see it adding.
AI do it? I mean, maybe it can.
I see it adding functionality, but
you'd think that Sage would add in the AI function into their own accountancy capability, and that you'd actually still need Sage. We'll have to go and talk to our FD about it. I mean, I think we'll see if he's still got his abacus out on his desk. Actually, no, he has got a computer. We let him have a computer. Well, he's a very nice man.
He is a very nice man. Their CFO did say that clearly they are investing in AI across their platforms. So there we go. So that was Sage. Moving on from
actually, I think if you're going to put out a statement, you need to start off. We're investing in AI. And that will get your share price going up.
So you're going to change company name to VSA?
Yeah, and actually, also now instead of we had that phase of everyone was doing Bitcoin treasury.
Yep.
Now you have a gold treasury.
I think that's a fine
gold
idea.
and AI treasury. Yeah, that's it.
We do, and we are changing our company name, aren't we, to VSAI?
VSAI got lots of gold.
Right.
Yeah, that's our new company name. Go and tell the CFO that.
Yeah.
Anyway, moving on. Carrying on
swiftly. Senior PLC market cap 1.1 billion. Shares up by 55% in 12 months. This is one of our bigger engineering companies. This is high technology components and systems for aerospace defense, land vehicles, power and energy markets. They have reported a trading update and performance ahead of expectations, particularly in the aerospace markets. Profit before tax comfortably ahead of previous expectations. They're doing a bit of restructuring their Flextronics division to manage costs, but growing well there. So that is senior. They've also disposed of its aerostructures business within aerospace, and of course that's helping cash and reducing their debt. Luceco, ticker LUCE.
That was this morning.
And a former pick of the year. From me. 240 million market cap, 4-year trading. This is LED lighting technology and connector components. They've had another strong year of growth. They said this trading update to the end of December, revenues are £271 million, up by 12% from 242 million. Operating profits 33.5 million, up 15%. So a good drop through there from the revenue. A decent statement. Well positioned to deliver another year of profitable growth and beyond. Yeah. Also, when I was reading this, I was looking at they've got free cash flow of £30 million. I mean, there's a working capital reversal in there, but your operating profits of 33.5 million, free cash flow of 30 million. So, good strong metrics. Volex, VLX, another former pick of the year. That was a while back, a couple of years ago. Market cap now is £811 million. These shares are up by 55% in the last 12 months. Volex is connectivity and cabling technologies. Now, the connecting technologies they have can deal with very, very high frequency signals. This is very specialized technology. Their connecting technology is used in data centers to communicate information around the data centers, in electric vehicles, but also in medical technology. They're expecting their revenues for the full year 26 ahead of consensus of $1.15 billion. And this is 6% growth, and operating profit, they're expecting a similar drop through, so 6% growth in operating profit to £112 million. They said, not surprisingly, very strong demand from data center customers. Well, this capital expenditure we've been talking about earlier. Electric vehicles and off-highway, and this is off-highways where Equipmake are supplying their inverter technology. Strong organic growth in the 9-month trading period end. Medical and consumer stable, but revenues slightly lower, but this other, I think they had a stronger prior period on that. So that was Volex. Eleco, the software, another one we've covered before. Ticker is ELCO, 126 million market cap. They're trading up to date to December. These shares are up by 4% over last year. Now, really interesting business. This is software for the construction market. So they're involved in all sort of design stages, from the initial planning stages through the construction, and monitoring the construction processes, but in particular how the money is being spent, and also involved in estimations as well. International little business, this one, UK, Ireland, Sweden, Germany. Trading update, revenues of £38.8 million, up by 20% from the prior period. Strong recurring revenue growth of 29%. We always look for that. Software companies, and cash of 16.3 million. I mean, I suspect that these underlying metrics are very, very good, but it's construction. And so when economies are a bit mixed, folks will always get a little bit concerned about the construction markets, but these guys are still, seem to be performing very well.
Well, and we shouldn't forget that commodity prices, and by that it is energy prices as well, because oil has been going up, gas has gone up about 40% recently.
Yeah.
Costs of input costs for a lot of companies is going to be increasing quite significantly.
Good point.
And so that's going to squeeze on margins a little bit, because it's going to be difficult to push through prices. So I would actually just have a little bit of caution on some of these companies. Be aware they are going to have high cost pressures. But there you go. There's a bit forward thinking for you.
Very good point, Andrew, there. Right. Security tagging technology.
Yes.
Big technologies.
Big technologies.
Big. 310 million market cap. The shares are up by 41% since December. Now, this company, without me going into any details, has been involved in litigation with former management, prior shareholders. This is all to do when it IPO'd.
This was Poppy, wasn't it?
Acquired Buddy Technologies. Yeah, from the prior CEO. Anyway, I'll leave listeners to read all about the litigation. Anyway, so this is tagging technology. Full year revenue, trading update, for the full year. Revenues of 49.7 million, slightly behind 50.3 million in 24. EBITDA of 24.6 million, down from 27 million. But they have said that a strong final quarter, awarded a number of new contracts, I think particularly in the US. Also, it's seen its recurring revenue grow by 12% to £52.4 million. And it has a strong balance sheet with 93.4 million in cash, or 61.9 million, accounting for the litigation settlement payments. So if you want to read about those, they issued a statement on the 19th of January about the settlement of the litigation, the Buddy litigation. This was the company acquired to form the IPO, and they're paying out £35.5 million in cash claimants. So that's, I guess, drawing a line under it, and why we're seeing the share price move.
I like the way you said you'll let listeners do their own reading up on the litigation. That basically means Phil doesn't actually know what's going on. Phil, I wouldn't be so rude as that.
He does a bit.
He doesn't want to disclose. Yeah, I like that. So anyway, I guess we'll move swiftly on to that. Do your own homework if you want, or the other one, if you really want to do, just go into. We've been talking about AI. You can go into chat. You can go into ChatGPT, okay? Because I just did it as we were talking, and here it is: Buddy litigation with former shareholders settled. Big Technologies agreed to a £38.5 million settlement. Intralook, it's all here.
Yeah.
So
there we go.
Type it into your chat GPT. Phil could have done that, of course, but he didn't know I was doing it as he was.
Cover lots
Anyway,
of other things. Right.
Moving on swiftly. I don't want to embarrass Phil. Come on.
Exactly.
What else? Have you got anything else?
I've got one final.
All right.
Come on, let's end on a good one. There's a retail sector.
Yeah.
But it has to do.
Curry's it'll be.
Come on.
And it'll be very good.
Yes, and it is very good.
Yeah,
and this is, for our doom and gloom on the high street, shares are up by 64%. Very, very good trading period of 10 weeks to January.
You say on the high street, but actually, I wonder how much of Curry's business is actually on the high street, or how much of it is done online.
Yeah, it's a combination, isn't it?
Well, it is a combination, but
what's quite interesting, I'll tell you what was interesting in this. I didn't know, my ignorance. Their mobile phone offering they have, ID Mobile, 2.5 million customers now, sales up by 21%.
Well, there you go.
That's quite, I know. I've been stuck with my mobile provider for so long. I was looking at that. Yeah, very, very good. So there we are.
Very good. Well, I hope everyone enjoyed that. And I think we're...
I tell you what, I'm going to be away.
Yeah, actually, next Thursday, I might just be in Joburg enjoying the sunshine and the cheap beer. Working very hard.
Yes. Is that a mining conference? Because I was at a technology conference yesterday, and it was in Shoreditch, and Andrew's going to Cape Town.
It's a tough life, isn't it? So yeah, you may be back with good old David Scriven, totally reliable, always there with a few good thoughts. But anyway, we'll get to that next week. There will be a podcast. Very good. Thanks, Phil. I hope everyone enjoyed it, and feel free to message us. Feel free to comment. And any companies that want to come and talk to us, just come and talk to us. Then we'll talk about you. It's free publicity. It's brilliant. But on that note, thank you very much.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.